Hey there, good morning everybody. Tim from Alpha Wolf Trading coming at you with this morning's Free Friday pre-market prep. I actually put out a video yesterday for the pro members. Actually, I think I put it out to everybody and unintentionally. But, I want to emphasize this morning that, there's a lot of fear out there. A lot of the markets are looking, a lot of the indexes and sectors are looking pretty beaten up. Really, there hasn't been any place to hide this week. Everything's been getting hit pretty good. The question that you have to ask yourself if you're an investor, longer term portfolio, is is there anything that has fundamentally changed drastically with the companies that you own? Right now, if you've got a stock that has been in a downward trend for the last 5 years, and you've just been holding and hoping that stock, that is not the stock you want to potentially add to, right? We want to look at the stocks that are in a nice uptrend, lower left, upper right, and are pulling back to areas of potential price support. Those could be stocks that are presenting opportunities to add, right, to your position, because nothing technically or fundamentally has changed within those companies, and we're heading into earnings season, right? Earnings and guidance are ultimately what matter. That is what is going to drive your stock, and if nothing has really fundamentally changed, this could be presenting an opportunity for you excuse me, to add to those positions, right? So don't let fear motivate you to make poor decisions, right? Is this the beginning of a bear market? Nobody knows that. Absolutely nobody knows that. Could we have a rip your face off snapback rally? Absolutely we could. We are actually up pretty significantly this morning in pre-market. JP Morgan reported better than expected earnings, and that's getting a bit of a gap. And as we head into earnings next week, that is what I think will really ultimately drive the markets, right? Earnings and guidance. So don't panic. We've broken some key technical areas, but we're also extremely oversold. NASDAQ, we have the candle completely out of the lower Bollinger Band, right? And I want to focus on something real quick here. T2106 and T2107, T2108. All right, now very dramatic moves in these. This is the amount of percentage of stocks over the 200-day. I've pointed this out before for the pro members and in previous videos. But when we get down below 20, that is a time when you want to be fairly aggressive in your buying. If you get into the single digits or the teens, that's when you really want to get aggressive. I mean, if you look back here, 2016, we got down to 12, 13 area, and then we had a significant rip higher. Same thing back in 2011. We got down into the 12 and we had a significant rip higher. We have gotten lower, right? We have gotten, let me back this out to the monthly time frame. We've gotten down into single digits. But look at what happened after we hit those single digits, right? We had these huge rips higher. And I think we're going to, we could potentially be setting up for that type of action once again. T2106, or I'm sorry, T2108, when it gets down into the single digits, right, we get some significant rips higher. So let's go back to the weekly time frame, and we can see we get down into these single digits, we get these big rips higher, right, on a fairly consistent basis. And here we are, T2108 is at 11. We are approaching those single digits. Now, this morning's rip higher may be the beginning of a pretty significant climb. We'll see what happens. It's Friday. We're heading into the weekend. Volatility is high. Let's see what kind of bounce we get. S&P 500. Let's take a look at that real quick. Let me go back to the daily time frame here. So we've got the 200-day at about 276 or so. Now, if we just bounce up to the 200-day and we are unable to, close above it, we could still have some weakness ahead for next week. Maybe we put in a bear flag here. We're going to have to see how this develops, right? If we get some kind of a bounce, I'm not suggesting that it's all clear and we have nothing to be concerned about, right? Well, let's see how these markets react. IBB. Let's take a look at the IBB real quick. Right below the 200-day. A lot of these indexes have got candles that are completely out of the lower Bollinger Band, which suggests to me that we may have an opportunity for a pretty significant snapback. But the IBB, again, what do we want to see? We want to see us close back above that 200-day moving average. IWM, below the 200-day, we've got a candle that is nearly completely out of the lower Bollinger Band. We're approaching, and actually we're kind of sitting right at an area of potential price support. I was looking for 150 or so, but here we are, 153, 152. There could be some potential support in this area. I was looking at this area down here, right? I was looking at this, got some support and resistance here at 150, so I thought that would be a nice round number to see if we could find some support at. Transportation index, same thing, right below the 200-day. So we've got a lot of technical damage out there. We need to reclaim that 200-day. But we are getting to these areas of fear in the markets where we could see a pretty significant snapback rally. So just don't panic. Don't panic for your long-term portfolios, right? And if you're going to be day trading this, just understand that we've got some extreme volatility out there. It can rip. It's dramatic. Yesterday we were moving 200-300 points in minutes, right? And it's going to be tough on anybody, shorts or longs, in that kind of environment, right? You go short because all of a sudden it looks like everything is collapsing, and then you get this 200-point snapback bounce, and you've got to be prepared for that type of volatility. So you reduce the size of your position that you are trading, right? Don't be trying to hit home runs, just trying to hit singles and doubles, right? Those will add up. So don't overstay your positions, and don't be overly aggressive here. All right. Just let's take a look real quick. I've got a couple of names that are definitely of interest. You've got Trump that is going to be meeting with President Xi, possibly. It's still not really confirmed. But, these China names that have been beaten up, Baba. Right, actually had a little bit of a bounce yesterday. And, I kind of like Baba as more of a long-term hold consideration, and I think it's worth keeping an eye on. We may be finding an area of potential support in Baba. Huya had a pretty nice bounce yesterday. The markets were down, and these things actually closed green. So Huya is another one that I happen to like. IQ, right, is another one that is on my radar, and these could actually be more swing type trades. I'm not suggesting you go in large, but potential swings. Bison is another one that I happen to like, and B's on it looks like it's up in pre-market. HEAR is one that I absolutely love. Now, I love this as a long-term, a hold type play. And Jim Chanos is shorting this, and Jim Cramer said it's a boom and bust story. And yesterday they came out with some preliminary guidance that was off the charts. And I think that we're going to continue to see strong earnings from these guys. They, Jim Cramer, boom and bust. I don't think he did his homework. He talks about doing that a lot. He didn't do it on this one. They had a division that they bought. They paid too much for. It was losing them money. It was a cash draining division. They got rid of that division. They're focusing on the headsets. Fortnite, the big concern, dropped down in the amount of players. Big deal. Who cares? Call of Duty. I'm a gamer. I'm a 52-year-old gamer. Call of Duty coming out with Black Ops. Battlefield coming out with theirs. Battle Royale is not going away. Headphones not going away. These guys are leading the space, and they've had some strong quarters. They're able to work on their crappy debt situation. I think this is still a great long-term play. I did start buying it. I wish I had more shares, but I started dipping my toe back in this stock when it was pulling back, and I'm looking for an opportunity to add to that position if it gets down into the 17, 16, 50 range. I'd love to add more shares. I hope this thing goes to $10. I'd love it to go to 13, right? Pull back to 13, 200-day moving average. I will be adding and building on my position in HEAR, because I believe this is a turnaround story, and I do not think it is a boom and bust story. I think we're just getting started there. But HEAR, worth keeping an eye on that one. TTPH had some news last night. Let's see. Now, this is not a great looking chart. Commercial launch of its intra-abdominal infection treatment. Okay, so I'm not exactly sure what the heck that means, but not a great looking chart, but we could have a potential double bottom here. Let me see what this is doing in pre-market. All right, so it actually got up to about $3.10, and we're currently sitting at about $2.69. Let me see where we've got some. And, look, $2.79, $2.80, we've got some potential resistance in that area. So right now, upside is not looking all that fantastic. $3, it hit the 50-day and pulled back, essentially. Potential day trading opportunity there. 51 million shares in the float. Got to look at their financials, see if they've, see if they've got any, if they're in need of cash, right? See, looks like they did an offering back in July, but they may need more cash. Potential day trading opportunity there in TTPH. Ruby is one that has had some insider buying that I have liked for quite some time. It looks like they settled some kind of a dispute that they had going. I don't know if that, I saw the news last night. Let me see here. Guardian News Media mutually agreed to resolve their dispute. There's no details on the settlement, but maybe it lifts some potential overhead resistance on this stock. Now that that's behind them, it's pulling back to an area of potential support is what I like about it, right? It's sitting right here at the $3 holla, so you've got a round number that could act as support, and you've got this trend line also that could act as support. And then there's been some insider buying. CEO bought 100,000 shares at $3.42. I like it here. You're buying at 42 cents, better than where the CEO bought at potential price support. This could be an interesting spot to take it for a swing. If it loses $3, maybe a pullback to that 200-day at about 265, 266 could be an interesting entry spot for a swing. Now, it would be a higher risk swing. It's got 45 million shares in the float. It did just close the gap on the daily, but I like the fact that the CEO has bought 100,000 shares at 340, and if I could get it at 266, nearly $1 better than where he bought it, that could be of interest to me. Now, I may just take a starter in that area, but definitely worth keeping an eye on Ruby. LCI had a little bit of a bounce last night after the close. This thing has been beaten up pretty good now. This is just really maybe a day trading opportunity with some volume. It's only got 26.4 million shares in the float. Let me see what it's doing here in pre-market. Speaking of pre-market, Ruby is not doing anything in pre-market off of that news, by the way. LCI, let me see. All right, popped to over $5. It's almost back to where it closed, back into the $4 area. So I'm not sure what's going on there, but it got up to about $5.20, and now it's back at $4.19. Maybe this thing gets some volatility. Maybe it gets some volume today. Worth at least having it on the radar for a day trading opportunity. I've got a couple of other small penny stocks that me and some of the members were looking at yesterday. I'm going to hold off on putting those on this video, but let me see what else we've got going on, see if we got anything else moving here. JP Morgan, like I said, they are popping a little bit this morning off of earnings. They beat. Yeah, I'm not, so far, that's all I've got for this morning. I got to take the dogs for a walk and then take a look and see what else is happening when I get back. But don't panic. Don't panic. Right? Is this the beginning of a bear market? Who knows? We'll see how this thing develops over the next couple of weeks. But we could see a pretty significant snapback rally after the sell-off that we've seen this week. So be careful out there. Play size appropriate. Don't panic. Always have a plan. Know your risk reward. And I'll see you all next week. Good luck trading today. Have a great weekend.